I think the Fed is expected to announce some balance sheet plans for the runoff. We want to see the timing of that, the level of that, the pace of that. I think that's the first thing that is being kind of telegraphed over the last couple of weeks. I think in addition, what we really want is for Chairman Powell to really stick to the script and not create headlines, just be consistent in what he has said over the last couple of months. So those two things are what really the market is focusing on at the moment.
Linda, there's been a cause or at least a concern right now that global growth is going to play a factor into the Fed's thinking. Should we be worried? Should investors be worried about the global growth picture right now?
Well, I think right now we are experiencing a little bit of an air pocket, both in U.S. and globally, really driven by the events of Q4, government shutdown, the trade issues, slowdown in Europe, Brexit. I think that is all kind of, and in addition to some weather issues in the United States as well. So all of that is kind of contributing at the moment to a little bit of an air pocket in the United States and globally. But as we look to the second half of 2019, I think we're going to see some green shoots starting to emerge. We're already seeing it in the United States with consumer sentiment numbers that have been bouncing back, housing numbers that have been, stabilizing. You have architectural billing index, which is in construction activity indication for the next 6 to 12 months. I think they're starting to show some positive signs. And if we go to China, which is really a big engine of emerging market growth, and in turn European and German growth as well, given their trading ties, I think over the last 6 to 12 months, they have put over 70 different stimulus plans, including tax cuts and VAT cuts as well. So I think we're going to start seeing all of those kind of activities start to show green shoots out of China as well, which is going to help overall global activity more in the second half of this year.
We've been speaking so much over the course of the past few weeks about inflation and the inflation outlook. All of those stimulus measures you mentioned should start to at least move it in the upward direction. But we are still at relatively depressed levels. I was just looking earlier today, 10-year break-even rates, the prediction in the markets for inflation right now, 10 years out, is still just around 1.7%. So what exactly does that say about what the Fed is looking at with regard to that overall inflation outlook?
Well, we have heard that Fed is going to stay more patient with inflation, even if it moves a little bit higher. I think as we see more capital expenditure, that would also improve productivity and enhance, keep that overall inflation in check as well. Just remember that a little bit of inflation in the market is not a bad thing. And as long as we get that global growth to accompany that, inflation outlook as well. And I think the Fed really does want to stay a little bit more patient with that inflation going forward.